Okay, so what's going on, guys? So Baba and Tunde are back on YouTube with a brand new video. So today I'm just gonna explain how to day trade in the stock market, and I'm gonna try to keep it really simple. So this video is really for people looking to get started and don't really know much about the stock market. So first of all, what is the stock market? So the stock market is where individual and institutional traders come together to buy and sell shares of a company. So this may sound complicated, but it isn't. So just think about a normal market where you buy a good or service, let's say. So you go buy it, but there's people selling it. Well, here's the same thing, but with public company shares. So first of all, as a beginner trader, you have to choose your market. So let's say you want to trade in a stock market, but you can also trade in the futures market. So the futures market was where participants buy and sell commodities and other future contracts. So this can be natural gas, gold, silver, soybeans, corn, and other commodities such as indice futures like the S&P 500 or the Nasdaq. Then you have the options market. So many of you guys probably know this market has been popular in the last months, especially due to COVID and new brokers such as Robinhood including it. And then you have the obviously the foreign exchange market, so the forex market, which is probably one of the biggest markets out there. So after you have chosen your market, so in my case I like to focus on two markets, the stock market and the futures market. For Baba it's more of the stock market and maybe the forex market. So yeah, so when you choose your market, you have to think, am I a price action trader? Am I a indicator trader? So I'm gonna explain this in future videos, but you have to choose your type of trading. Some people like to trade price action, such as me. I prefer to trade directly the price, the candlesticks. But some people like Baba, they prefer to trade with indicators and other things supporting their analysis. And you also have to think about different other types of trading, such as, are you a swing trader, are you a day trader, or are you a bit of both? So what is swing trading? Swing trading is basically when you buy a stock and hold it for at least, let's say, 1 week to a couple of months, depending on what type of position you're in. Or are you a day trader? So do you get in and get out before the end of the day? Or are you a bit of both? So this is really a good combination, I would say, to be a bit of both, so you have experience in both domains. So when you know all of this, obviously you have to choose your broker. So let's say you're in the stock market, right? So if you're in the stock market, you can trade with TD Ameritrade Thinkorswim. So this is TD Ameritrade Thinkorswim. However, this isn't available in Europe. I think you can get the paper money version. So this is what I have. So I can plot the charts, but you cannot trade with real money on this one. You also have TradeStation. Your TradeStation is a really good platform, and I think interactive brokers if you live in Europe, but that one is a bit hard to set up and probably not really beginner friendly. So if you trade futures, a really good one is Tradeovate. So if you trade options, most brokers, they do offer options. I think TOS, so TD Ameritrade, offers options. Robinhood, obviously. I don't really know about other brokers, but it's not so difficult to find. And for the forex type of traders, you have a good combinations, which I think most forex traders use. So they analyze on a website called TradingView, and then they actually buy and sell on their phone or a laptop using MetaTrader 4 or 5. I'm not really sure. So now that you have like the basics and your account set up, you can start and analyze charts. So first of all, this is a candlestick chart. So why use a candlestick chart and opposed to a line chart? Well, a candlestick chart actually shows us bars, which are very, very valuable. So these bars are called candlesticks, and actually these candlesticks, each one of them represents a certain time. So let's say right here I'm on the 10-minute chart. This means that this candle is 10 minutes, this one is 10 minutes, this one is 10 minutes. So here you have 30 minutes. Within these three candles you have 30 minutes and so on. But you can choose a lot of time frames right here. So yeah. So basically if we go on the 1 minute, one candle right here would be 1 minute. And if we go on the 4 hour, this would be 4 hours. So let me zoom out, maybe you'll understand a bit better. So yeah, so this would be 4 hour, and yeah, so this is a very long period of time, all of this. While if you go on a smaller time frame, let's say the 5 minute, so this would be a day. So yeah, so you really have to choose your time frame depending on your trading style. However, some time frames are recommended and opposed to others. So let's say you're a day trader, you'll most likely use a less than 4 hour chart, so 1 hour, 30 minute, 15 minute, or 10 minute, or yeah, even 1 minute, because these move faster and allow you to get more precise entries within the day. However, if you want to swing trade, you'll probably use higher time frames, so you can see the bigger picture, as your goal will be probably to get in and out in a longer period of time. So this brings us to candlesticks and how they work. So as you can see here, this is a green candlestick. This means that the price opened at this low and closed at this high. So this means the price of the stock, future, whatever you're trading, increased in this certain time period. So let's say this is a 10-minute chart, the 10-minute candlestick, I'm sorry. So the price opened here, closed here, but within this 10-minute time period, it actually moved to this low and this high, but it did not close there. So this is the exact same concept with the red candlesticks. However, for red candlesticks, we have an open at the high, a close at the lower part of the main body, and again the candlestick traveled to this high and this low, but it did not close there. So yeah, so you just gotta remember, green candlesticks, they open at the lower part of the main body and close at the top of the candle. However, not each candle, but most candles have these short legs, I would say, that these are called wicks or whiskers, shadows, whatever you want to call them, and these are price ranges where the candlestick moved without closing there. So this is also a big advantage of candlestick charts, because line charts do not offer this kind of advantage of seeing where the price moved within the certain time period. Now I'm going to talk about the technical analysis basics. So for this one, I have a very good example. So first of all, we're going to talk about the basics of support and resistance. So what is support? Support is an area where price tends to bounce at but doesn't have to. So you really have to highlight like 3 words here. It's an area, it's not a line, it's an area. It tends to bounce there and it doesn't have to. So these are really 3 important words you have to keep in mind. It's an area, it's not a line, so always keep it. Let's say your support is at the price range of 50. Well, if you consider this as a line, you'll probably get confused, because as you can see right here, the price doesn't really bounce, but it bounces at 49.15, 49.40, you see? So it's not really super consistent. That's why I always draw a rectangle when I draw my support and resistances, because it allows me to see a better picture of what's happening. So as you can see, I just draw a rectangle, and now I have a more accurate image of where the price could bounce at, and not a really restrained zone like a line. And now it's basically the same thing for resistance. So resistance is an area where price tends to reverse to the downside. So in this chart, this is the AMD chart, by the way, you can see that your resistance area is right here. Why? Because you just look at the chart. So in this area, the price seems to tend to really draw back down and go back to support. And while on support, it's the complete opposite thing. But you must also know that obviously, in order for a market to move, it will get out of these support areas, support and resistance areas. So let's say here you have a very big move to the upside while breaking resistance. So yeah, so you always have to keep that in mind. So as for entries, you have a lot of type of entries, but in my experience, so what I like to use personally is a 2-bar breakout. So a 2-bar breakout is when so actually we have a super good example right here. I think, yes, we have a super good example. So looking at this area right here, so let me draw a rectangle so you guys can focus on this area. Let me remove it. So a 2-bar breakout is when the actual candle, so let's say we're right here, and this candle, in order for me to enter, has to break the ultimate high of the previous 2 candles. So this candle has to close above these 2 candles right here, and we can see that this closed above and it pushed to the upside. Well, it obviously doesn't always work out this perfectly, and you have to put it into a larger context. But yeah, this is I think the simplest way I could explain it to you guys. And yeah, so these are basically all the things you should know for a beginner. See you guys in the next video.